Okay, good morning, folks, and welcome to Stock Charts Today, as well as Members Stock Chart Request. This is where we review the markets in the pre-market, as well as I review the symbols that our members submit for us to review on video. Now, members, this evening there will be no market wrap, but I will be preparing for the week ahead commentary, which is where we review our strategy for the next trading week, as well as reflect back on the prior trading week, and we make tactical decisions about how we are going to position our portfolio to profit either from a bull or bear market. So expect that coming out on Sunday. And for non-members, I do a quick review of best stock charts, which is a review of the symbols from a higher level view, not a detailed view, but a higher level view. And those symbols reflect the opportunities that we see in the market that interest us most. And then on the week ahead commentary with members, I'll go into a deep dive on those charts, as well as a review of the overall health of the stock market. So a lot to come out this weekend, as every weekend. Let's get to the charts. The Dow Minis, we're up this morning, triple digits. We're right into that 25.2 level, and we have backed off of it yet again. Now, I have been somewhat cautious on this market to the long side, and there will come a point where if we're able to break out, that I will change my tune. But on this 4-hour chart right now, I see no breakout. And as it stands right now, the market since their all-time high, whether it be the Dow Jones, the S&P 500, the Russell 2000, you pick your index. And as it stands right now, we have put in lower highs. What's missing? A lower low. If we get a lower low, everything in this market changes. And not for the better for longs. For the shorts, we'll do just fine. Now, if we break out on these markets and negate the lower high and begin to put in higher highs, well, then we need to be net long the market. You see, I don't have an agenda here. It's all a matter of what the market is telling us, and we trade in that direction. We may be contrarians, but we respect the fact that we need to appreciate the direction of the overall market. Those who try to fight it, they do so at their own peril. So this morning's price action in the pre-market is up. That doesn't mean it's going to close there. It doesn't even mean that it's going to be at these levels or higher by 10:30 a.m. Eastern Standard Time. It's just an indicator of where we may open. Now, there isn't much in terms of economic data coming out today. We do have European inflation coming out this morning at 5 a.m. our time, 10 a.m. Greenwich Mean Time. That can move the dollar. It can also impact yields. Why can it influence the dollar? That's a good question. Why does European inflation influence the dollar? Well, remember, the European Union has been in an accommodative easing mode for longer than we have now. And their argument is that they still haven't seen enough inflation except for Germany. Germany has 2% inflation or above. The moment that you see the rest of the Eurozone see at or around 2%, you can bet that the Germans are going to be clamoring for the rest of the EU, the ECB, to begin to hike rates. What will that do to the euro? You're going to see the euro surge. What will that do to the dollar? The dollar is going to drop like a rock. Let's take a look at the dollar now and how it's behaving prior to this announcement. This is a 4-hour chart. Members, I discussed the support level and its significance last night. So go check my last commentary with regard to this support level on the dollar. It's significant. We will be taking action on a break below this level. Now you can see that we had a strong overnight session, but that has begun to fade for the dollar. And we're threatening right now to put in lower highs. Now, if we take out this low, I think that the probability of lower lows on the dollar next week is very high. We have a lot of Fed action next week. Excuse my voice. You have Fed Chair Powell. He'll be speaking in front of Congress. You had Bullard, Jim Bullard, one of the Fed governors come out yesterday. No rush for a fourth hike in 2018. So the dollar, while still behaving fairly strong, is coming under a bit of pressure. We remain down below the 90 level. And what's really pressuring the US dollar, let's go take a look at it, is the US dollar Japanese yen trade. And you can see that the dollar has had a really fantastic rebound, but yesterday it was hit hard, very hard, and we were slammed back down below key support. Now, of the major currencies that the dollar trades against, the Japanese yen is certainly one of the top 5, certainly one of the top 3. But the euro carries more weight in terms of a percentage of the currency basket than does the Japanese yen. So as long as the euro remains slightly weak versus the US dollar, the dollar can hold up under pressure against the Japanese yen. Now, here's a chart of the euro-US dollar trade, and you can see that yesterday we flashed pretty much a bullish engulfing of the prior day's move. So, you know, we could take our trend line out, draw a lower band of support between the lows seen last on February 9th and yesterday's lows of 1.226 on the euro. And we could buy the breakout, whether it be you want to buy the euro versus the dollar or gold, silver, whatever. If you see the euro breakout versus the US dollar, all commodities for the most part are going to go higher. Some at a greater percentage than others. Gold will certainly go on a tear, the gold miners. Oil, not gas, probably not so much. So watch out for the currency trades here because they are at a pivot point. Let's take a look now at gold and how it's trading. All right, gold is in a very tight wedge formation. We need to see a clean breakout above resistance here for us to consider putting on a trade to the long side on gold. That would mean we would need to see dollar weakness. So this morning is going to be an important morning. It's 4:59 right now in the AM Eastern Standard Time. We have 1 minute until we get the European inflation numbers out. So we'll check back in here. Actually, it just turned 5 AM. Let's drill down to see how gold is behaving on the news. This is now a 5-minute chart. Okay, we got the number out. It's 1.3, which was the consensus target. No shock to the upside, no shock to the downside. So the markets are going to dictate here which way the euro is going to go. It depends upon the sentiment prior to this number. And we won't know until we get a breakout above this upper band of resistance here, whether or not we have a head fake going on here, whether it's a buy the euro news event. We're starting to pick up now. Let's see where we close out the period. Do we break out or do we break down here? The dollar should be under pressure right now. And it is. We're seeing some pressure here. I'm not going to be convinced that the dollar is down and out in the short term anyway until we, at a bare minimum, break support here. And especially down here where I have my alerts set up. This is where we'll take action on our commodity trades. But as it stands right now, we have a knee-jerk reaction on a consensus number out of the EU on inflation. Next week, there'll be another report as well. That's a weekly number. Let's get to the S&P 500. Let's take a look at how it is trading this morning. Let's pull back here. Get rid of the 30-minute chart. Go to our 4-hour chart. All right, so on a 4-hour basis, we appear to have rallied through resistance and closed there. We are now retesting. So if we break out above 27.75 on the S&P 500, we may see a market that has legs to the upside, but we must hold this support level here. If it fails, that's a breakout point failure, and we'll probably head down to the lows seen on the 21st, and that low was at 2682. The NASDAQ 100 holding up strong here. We're consolidating. Our Bollinger Bands are very tight. You know, I have a short position on in the NASDAQ 100, an individual company. So I may need to stop out of that trade today. We came very close yesterday, but take note, we may be putting in lower highs. If we break down below Wednesday's lows, we may be leaning into our short position of one of the NASDAQ 100 names. But if it goes against us, we stand fully prepared to move to the sidelines, cover that position, and perhaps even buy the shares. Let's leave off one last look at the dollar. Increasing weakness. Let's drill down. Bearish key reversal, 30-minute chart. Gold. It appears to be putting in higher lows. We're off the lows of the session, but still down. So lackluster performance here. Members, let's get to your requests. Okay, the first chart up is UWT. This puts you long of oil. It's a leveraged ETF, so not for the faint of heart. We have a breakdown here, a real serious sell-off the week of the 5th. We have since rallied back. I'm a big believer in retest. And you may say, you know, Bob, the second week it came back down and retested. Not really. We did retest, yes, technically. But we didn't rally up into a resistance level, a lower high, and then pull back and retest the support level. That's more of a firmer foundation of which you would want to buy the shares off of, because you can put your stop loss right below this level, because you know if it breaks 2178 to the downside, you're going down to 1986 in a heartbeat. So me, I wouldn't buy these shares. Why? We're right into resistance. We hit it yesterday. Daily chart. On a daily basis, the first thing I look at is the fact that we have a lower high. Of course, here is our sell-off. We became oversold, and we have since rallied. I need to see a pullback and a retest. If I don't get that pullback and a retest, I at least want to see a close above 2830, which is where you have resistance above. You could buy it on a close above that level, but just use a stop right below that level and let the market take you out and keep your loss small. Add more aggressively on a breakout above 32.96. Ideally, you're going to want to see the dollar weaker on that breakout. Volume to the upside has been very, very light, and this matters, right? MACD histogram, I still think has some backing and filling to do here before we go positive and we resume the uptrend. So I think that we're in a trading channel, and you'll get a better opportunity at lower prices. DGAZ. I see everybody's into commodities this morning. Good stuff. DGAZ, Nat Gas, leveraged ETF, weekly chart. Now, this is the inverse. This puts you short of Nat Gas, and we broke out. So very, very speculative. And I think that if you're treating it as a speculative trade, and I believe that all trades, no matter whether it's an investment or a day trade, they're all speculative in nature, right? But this is extremely speculative because you're shorting a commodity with a leveraged ETF. Okay, so that's the perspective, and I'm not against it, but let's just keep it in perspective in terms of risk. And I would use a stop where I to get long below this week's lows at 28.48. We have broken out of a downtrend channel. I would look to add more to the position on a breakout and above 32.92. And then really get aggressive on a rally up and through 42.92. Daily chart. All right, so we were higher in the week. We broke back down below support. Again, I would use a stop on a breakdown below 28.48. Let's check and see how Nat Gas is doing in the pre-market. All right, so in the pre-market, well, this is a 30-minute chart. Let's go to a 4-hour chart. We're down slightly on the morning, but we're finding support. And this was support back here on the 21st and back here on the 19th. It was resistance back here on the 16th. So I would wait to see how this support level resolves itself. Will it act as support, or do we break down? Again, this is a 4-hour chart. I would watch this support level very, very carefully before I pulled the trigger on this trade. Critical support. I would buy the UGAZ on a breakdown below the support level, and I would avoid it like the plague if we break out on nat gas above this upper band of resistance at, let's call it, the 2.6 level. The next chart up, Chesapeake Energy, another trade with nat gas exposure. A strong week so far. I think this could be bought on spec using the stop loss right below 2.53. Daily chart, Stokes hooking up, RSI hooking up. Looks like a big short squeeze yesterday on news, big volume. I don't know what that news was, so I would certainly do a little bit of due diligence before you enter the trade to see whether or not it's a one-hit wonder or whether or not it's something that is longer-term beneficial to the company. But something happened here. Now, I will note you have a topping tail on top of this candlestick yesterday. What does that imply? It implies that you have some sellers above. There's not much overhead supply until we get up to the 3.4 to 3.5 level. And then you're going to have a ton of it. So would I go chasing the shares? No. I think that no matter what this news is, and in all probability an earnings report, you're going to see some consolidation, some backing and filling, and that's a good thing for the longer term. 2-hour chart, I just want to see how we may open up. It actually looks pretty good. We have a pullback off of a very overbought condition. Good stuff. Bullish key reversal into the close yesterday. So we may get new higher highs, but again, watch the 3.4 to 3.5 level on CHK, okay? A lot of overhead supply there. So if you bought it where it closed yesterday, I would look to book my profits right at 3.4, 3.5, treat it as a very short-term trade, and then buy on a pullback and a retest in the coming days and weeks. AGTC. This is a new one for me. Monthly chart, not a weekly chart, but a monthly chart. I really wanted to get rid of the noise on a weekly chart. And you could see that last month, January, we broke out above the upper band of resistance, and we were stopped dead at 5.51, which marked resistance back here in May, June of 2017. Would I buy the shares now? No, because right now it's an inside month. No new high, no new low. So it's directionless. Ideally, we get a pullback and a retest of prior support, which is completely possible. Now, it being a genome play, you know, this thing could be at $20 today for all I know. So would I be shocked to see us rally back and close positive on the month? No, no way. You know, I would never bet against these genome plays. They're very, very volatile. Daily chart. Now, we were in a triangle formation. We broke down below support earlier in the week. We rallied back yesterday and closed back above key resistance. So if you're dead set on playing this, the way I would play it is one of two ways or both. A, on a new daily high, open up a position, or ideally on a pullback and a retest of 3.80, open up your position using a stop right below the week's lows. Let the market take you out. RSI is hooking up. Stokes are hooking up. This is a tough one to play, especially as a momentum trade, right? Because you have so much overhead supply here. But the key is use a stop right below the week's lows. Let the market take you out. Don't get overly weighted in the position. And that's it for this morning, folks. Members, I'll be in the forum later on if you'd like to drop a note. Everybody have a profitable trading day and a great weekend. Be well.